Good day and welcome to Some TV Business Dailies. I am Herbert Naftali Bandawa, and today we bring to you the latest development making headlines across Nigeria economy, market and business world. Here are the headlines. Naira depreciation as Forex blames liquidity crunch, weak duty December inflows. The Nigeria Exchange Group top brokers control 78% of market transaction. Nigeria's Forex reserve falls by 263 million end week 25 accumulation strikes. Now the news in full. The Nigerian Naira has been experiencing a decline in value, with Forex traders citing liquidity challenge in market as the primary cause. According to the president of the Association of Bureau de Change Operators of Nigeria, Aminu Gwadabe, the Forex inflow from Nigeria in the diaspora, known as Dirty December, is not coming as expected, with unlicensed operators ambushing the little available Naira close week. On the weekend note, the trading at 1.466.5 all over $1 as of Friday 19, 2025, compared to 1.454 on Monday, December 15, extending a steady depreciation recorded throughout the week. This presents a level not seen in October 21, 2025, highlighting the tenure of volatility after a period of relative stability. The Central Bank of Nigeria, CBN, has intervened in injecting $1.5 million into the Forex market to strengthen the Naira and stop the depreciation. The licensing of 82 Bureau de Change operators is also expected to inject more liquidity into the market, especially in the retail sector. The 10 broking firm dominated the Nigeria exchange market, accounting for 85% of total transaction value, worth 612.19 billion for the week ended in December 19, 2025. Absca Security Limited led with the park, executing 337.31 billion transactions in security, over 55% of the market. And then Cardinal Stock Securities Limited and Apt Securities Fund follows, handling 52.28 billion and 51.16 billion respectively. The bond segment also witnessed significant concentration, with the top 10 brokers executing 212.82 million, accounting for 97.74% of the total bond transaction value. APT Securities and Funds Limited led bond trade with 54.37 million. The analysts attributed this concentration to institutional investors positioning for year's-end dividend payout. The Nigerian exchange brokers' performances in hierarchy is expected to remain concentrated, with institutional investors deepening portfolio performing brokers in Nigeria, or the factors driven in the market concentration. Then you follow us the more. The Nigerian foreign exchange reserves has declined by $263.51 over to 55% of the billion of us as of 17th December 2025, following the consecutive day outline inflows. As of 15 and 17, it ended a sustained build-up that had a peak of $45.472 billion as of December 12. The decline is attributed to slowing of the Forex inflows and high demands, as well heavy debt repayment. The Forex inflow plunged by 67% month-on-month to $2% in November, the lowest since July 2024. Foreign portfolio inflows fall sharply to $593 million from $3.5 billion, while foreign direct investment (FDI) collapsed to $10.4 million to $221 million, highlighting pressure on the Naira. Despite the declines, Nigeria reverse buffers remain significantly higher than the 40.19 billion recorded at the end of 2024 and 33.22 billion in 2023. Analysts expect festive season pressures on the Naira alongside potential upticks in inflations driven by import-led consumer spendings. However, stronger reserves in diaspora remittance and recent Eurobond inflows are expected to cushion the currency, as also help the Central Bank of Nigeria to manage liquidity. The Naira has fallen to 1,466.5 to $1. It is the lowest level since October 21st, 2025. Amid renewed pressure in the forex market, the currency weakened across 5 consecutive trading sessions, reflecting persistent demand for foreign exchange deficits. CBN interventions, as well the Naira depreciation, coincidence with the President Bola Ahmed Tinubu's presentations of the 2026 appropriation bill, which assumed 1,400 all over $1. The analyst notes that the disconnect between fiscal projection and forex market realities, citing concern over supply sustainability and oil output risks budgets. The exchange rate assumption is stronger than the current official market rate. The market watcher says that there's a divergence could cause inflection sentiment with pressure on the Naira, likely if crude oil production targets or external inflows falls out. President Bola Tinubu has presented the 2026 budget to the National Assembly with 23.85 trillion deficit, consolidated reform, sustainable growth, focusing on security, infrastructure, and human capital. The total revenue is projected at 34.33 trillion, with expenditure estimated at 58.18 trillion. The budget priorities: defense at 5.4 trillion in infrastructure, 3.6 trillion on education, 3.52 trillion on health, and 2.48 trillion assumptions include a total of $64.85 crude oil and 1.84 million BDP production, as well 1,400 all over $1. Tinubu stressed fiscal disciplines and value for money spending. The presentation raised transparency and concern, and as the 2025 performance report wasn't released. As Nigeria is running a multiple budget simultaneously with overlapping and financial issue. The financing budget as well as exchange rate assumption is stronger than the current market rate. In the oil sector, the Nigerian oil revenue fall at 62.2% below target in the first 7 months of 2025, hitting 1 trillion against 25.39 trillion target. The lower crude oil production is 1.66 million BDP versus 2.1 million BDP target, and weaker global prices below 65 and below 75 benchmark. The drop as well as shortfalls in oil revenue provided partial relief, with corporate income tax and value-added performing target. However, custom duties and other receipts underperformed, leaving 1.8 trillion gap. The revenue gaps highlight Nigeria's fiscal vulnerabilities and questions their budget credibility. The shortfall has implications on deficit financing as well borrowing, as well liquidity. Nigerians struggle with the oil theft, vandalism, and underinvestment, limiting production capacity. The 2025 budget assumptions now is optimistic, underscoring the need for reforms to scale up non-oil revenue. The Nigerian billionaire Aliko Dangote attributes the high cost of local produced cement to the country's fixed tax and regulatory burden. Dangote explains that exported cement is exempt from multiple taxes and levies, making it cheaper than domestically sold cement. The tax include income tax, education and health levies, value-added tax, and withholding tax, which increase production costs. Dangote notes that local manufacturing alone cannot resolve high pricing and domestic customers. He shoulders the burdens and struggles, inefficiencies. As well, he says that cement prices in Nigeria range from 9,500 to 10,200 for a 50 kg bags, prompting concern from policymakers as well as the public. The ministers have urged manufacturers to lower prices, citing improved economic conditions and need for affordable housing. Land price in Banana Island as in Lagos State has surged by 540% between 2020 and 2025, reaching approximately 3.5 million per square meter. The areas of luxury residential market drove the growth, with ultra-luxury mansions and detached houses attracting demand. Rental values also increased significantly, with a 3-bedroom homes rising from 11 million to 27.5 million. And the sales market saw substantial gains, with 4-bedroom homes appreciating from 350 million to 800 million. Other prime locations like Ikoyi, Victoria Island, and Lekki Phase 1 also recorded strong growth in land prices, rentals as well as sales. Ikoyi average land price per square kilometer rose from 420,000 to 2.15 million. The Lagos luxury residential market has delivered strong sales growth, with Eco Atlantic leading at 59.5% and Ikoyi at 58.14%. Likewise, Banana Island at 55.30%. The growth reflects its appeals for ultra-luxury residents and limited waterfront properties. Dangote Petroleum Refinery has reduced the minimum petrol order from 500,000 liters to 250 liters, making it easier for smaller marketers to purchase directly. The gantry price remains at 699 per liter, following a 129 reduction earlier in December 2025. The refinery now offers a 10-day credit facility backed by a bank guarantee for a similar volume. The volume-based discount apply for larger quantities, and free delivery to petrol station is expected soon. The move aims to expand nationwide distribution and streamline access to individual marketers. The lower gantry price is expected to lead as well reduce retail fuel prices, particularly in regions with high logistic costs. Aliko Dangote, CEO of Dangote Group, valued petrol below the price of 740 per liter during festive season, warning against sabotage attempt. The United States has pledged $2 billion in grants to support Nigeria's health sector from 2026 to 2030. This commitment is part of a broader Memorandum of Understanding (MOU) between Nigeria and the U.S., aiming to improve access to quality primary health care and strengthens the country's capacity to prevent, detect, as well respond to health threats. Nigeria has also been committed to mobilizing $3 billion in domestic funding for the health sector during the same period by allocating at least 6% of the executive annual federal and state budgets to health. The partnership reflects Nigeria's determination to build a resilient health system and reduce dependency on external aid. The Memorandum of Understanding outlined collaboration on early detection, prevention and control of infectious diseases, HIV and AIDS, tuberculosis, as well as strengthening diseases surveillance and outbreaks response, and laboratory systems, as well as frontline healthcare service, which will provide additional support and data system access to essential health commodities, as well improved its standard. The Naira is projected to close 2026 at around 1,350, supported by positive fundamentals development according to Cardos Securities. The report building momentum beyond the rebound notes that the flexible and forex environment, as well higher external inflows and sustainable policy are discipline expected to strengthen investors' confidence and Naira to likely operate within a 1,450 to 1,350 range at distortions in the foreign exchange market. However, risks of depreciation could push the Naira to 1,550 if election-related money supplies rises. And the oil price will fall below $58 barrels or global pressure return. The IMF's real effective exchange rate as index estimate the Naira at about 23.6% undervalued, also to go with 1,162 USD. As well, Cardos behavioral equilibrium exchange rate approach shows the Naira is undervalued by 19.3% at 1,520 versus 1,220 fair revenues. Naira is expected to strengthen to 1,350 by 2026, driven by a favorable forex environment, higher external inflows and policy discipline. According to Cardos Securities, the currency is currently trading at 1,458.32 per dollar, having appreciated over 5% year to update in 2025. The IMF estimates the Naira at about 23.6% undervalued, also at around 1,163 USD, while Cadro's behavioral equivalent exchange rate to appreciate the dollars at undervalued by 19.3%. Versus 1,230 fair revenue. The risk of depreciation could push Naira to 1,550 if election-related money supply rises or oil prices fall below 58 barrels. The Naira has shown resilience, recovering from a peak of 1,596 in April to trade within the 1,400 zones. Cadro's 2026 Outlook report as building momentum beyond the rebound. It also highlights the Naira's potentials to further appreciation. Avon Medical Practice has launched a 200 million fully equipped intensive care unit, ICU, to expand its critical care capacity. The facility, located within its recently commissioned building, as well extension, operate 24/7 with a day dedicated team of intensive care physicians as well critical healthcare nurses. On a call for specialists, it equipped with advanced to life support systems, including mechanical ventilators, multi-node monitors, and defibrillators. As well, ICU aims to manage high acuity cases and reduce medical tourism. The ICU establishment reinforces Avon Medical's commitment to bringing healthcare gaps and delivering evidence-based care aligned with international best practices. Dr. Akimbi Oke, the CEO of Avon Medical Practice, emphasized that investment demonstrates their resolve to provide world-class healthcare facilities to Nigerians without the need to travel abroad. The Avon Medical Practice is a 50-bed multi-specialty healthcare provider committed to providing superior patient experience. The hospital, the state-of-the-art facilities include a full-service hospital, a multiple-site clinic, a dialysis centers, and a trusted pharmaceutical and laboratory centers. We now go for a short media break. When we come back, we'll continue from where we stop. Welcome back. News continues. The Nigerian artist racked in an estimated 592 million from touring live performances in 2024 and 2025, solidifying concerts, festivals, and tours as the primary revenue drivers in the country's music industry. According to the Baselines to Billions, Nigeria's Music Market Intelligence Report, live events accounted at about 66% of the total artist earning, highlighting the importance of physical performances in Nigeria. Evolving music ecosystem. The report says a collaboration between the National Council of Art and Culture and the Regal Stone Capital notes that digital streaming and virtual platform generated an estimated $181, representing a roughly 30% of the total industry revenue. The industry operators attribute the growing dominance of live and digital revenues to reduce direct financial influence of traditional radio airplays. The total values of Nigeria's music industry stand at about $901 billion, roughly $600 million in 2024, and is projected to reach $1.5 trillion at about $1 billion by 2033. The Nigerian artists generated over 58 billion in royalties from Spotify in 2024, more than doubling 2023 figures. Would you like to know more about the Nigerian music industry growth prospect or the impact of the digital earnings? You follow us all through on our Some TV business as we bring to you exciting stories. On to Kano State. The Kano State government has approved 16.2 billion for the award of the Gorzo, Taure, and Sanyawa roads and 4.4 billion to the dualization of the 5-kilometer road in Karaye local government area. The approval are part of the state's effort to fast-track road infrastructure and improve transportation across urban and rural areas. Other road projects approved include 2.2 billion for the rehabilitations and of Alfred Overlay of Murtala Mohammed Way, 1 billion for additional works along corridors near Airport Gate, Trump Roundabout and Murtala Mohammed Ways. The state government allocated funds for education, healthcare, water supply, security, as well as other projects. The approval covers both urban and rural roads, with allocations for projects in Albasu, Kiru, Sumaila local government areas. The Kano State governors had submitted a 1.37 trillion budget proposal for 2026, but it is unclear if those approvals will perform part of it. The federal government of Nigeria has issued a 590 billion power sector bond to clear Genco and gas areas, marking a major step in addressing long-standing payment areas in Nigeria's electric industry. The bond issued by NBET Finance Company Limited is backed by full faith and credit of the federal government of Nigeria. This is the first phase of the wider bond program targeting 1.23 trillion by the first quarter of 2026. The proceeds from the bond will be used to settle verified arrears owed to power generation companies and gas suppliers. Obligations have been waged heavily on the sector's liquidity and investment outlook. According to Mrs. Olu Arolu, Special Advisor to the President on Energy, the program is designed to restore confidence and financial stability in the sector. The Presidential Power Sector Debt Reduction Program seeks to resolve a legacy debt overhang and that has overweighted the new investment, weaken utility balance sheet, and undermine the delivery of reliable electricity across the country. The program has been described as the largest coordinated financial intervention in the history of Nigeria's power sector. Would you like to know more about this impact of the bond on the power sector? You can still also go along with us on Some TV. The World Bank has approved 500 million loans to Nigeria to boost medium businesses, as well targeting long-standing funding gaps in fostering inclusive finance, as well medium businesses project aims to expand access to credit for micro, small, and medium enterprise, with the focus on women-led businesses and agro-business. The project structured as a blended facility, which comprises $400 million from the International Bank of Reconstruction and Development and $100 million from the International Development Association. As well, it will be implemented by the Development Bank of Nigeria with credit guarantees to deliver through subsidiary Impact Credit Guarantee Limited. And it is expected to mobilize approximately $1.89 billion in private capital to expand the debt financed at about $250 million to SMEs and issue gap to $800 million in credit guarantees. The project aims to boost job creation, inclusion, and economic opportunities nationwide, particularly to women as well agro-businesses. The Central Bank of Nigeria, CBN, has directed the bank and financial institution to implement multi-factor authentication for foreign card transactions exceeding $200 daily to $500 weekly and $1,000 monthly. This aims to improve security and user experience for tourists and Nigerians returning from abroad. The CBN directive requires banks to ensure uninterrupted and efficient local currency withdrawals, payments, and transactions for users of foreign-issued cards. The institution must maintain high system availability, configure ATMs and point-of-sale terminals to accept international cards, and comply with Global Card Association standard. The CBN emphasized transparency in pricing and settlement, requiring banks to clearly communicate exchange rates to customers and disclose associated charges, as well upfront institutions, and also implement robust transaction monitoring and system to detect unusual usage patterns and strengthens knows your customers and anti-money laundering controls. That wraps today's episode of Business News on Some TV Daily. But before we go, let's look at the headlines again. Naira depreciation, as well forex markets blame liquidity crunch, as well week 30 in December of fraud. We were told that Nigerian Exchange Group top brokers would as well control to 87% in the market transaction. Well, Nigerian forex reserves falls by $250 million at the end of 25-week submission. This is the end of the business news for today. On behalf of the management of Som TV, I am Herbert Naftali Bello. Wish you all the best.